welcome you to Union Bank of India present the Economic Times Financial Inclusion Summit 2016. Let's hear to our dignitaries on Financial Inclusion Summit 2016. Now I would like to invite all the dignitaries for the plenary session, Building Financial Capabilities, Innovations and Initiatives Beyond Financial Literacy. For this, I would like to invite Sh Arun Tiwari, Chairman and Managing Director, Union Bank of India. Now I would like to invite Dr. Chhatrapati Shivaji, Chairman and Managing Director, SIDBI. And now I would like to invite Shri Anthony DeSa, Chief Secretary, Government of Madhya Pradesh. Thank you all the dignitaries. Thank you so much.
Conversing the progress made thus far and the new innovations and initiatives in the financial literacy area. The 3 P's of PMJDY, the public sector and people's participation. This summit today would be discussing the ideas and ideals which inspired national movement for economic liberation of the poor of the country and the underprivileged. In a matter of just 2 years now, there are at least one member in every Indian household who is having a bank account. In fact, it has been much more than just a bank account. The PMJDY has given the poor an identity and helped them to live with the dignity and as they integrate with the financial mainstream. Moreover, with mobile subscriber base and Aadhaar enrollment, both are surpassing a billion mark, the Jam Trinity, Jan Dhan, Aadhaar and mobile is now in place. If used effectively, the impact could be truly transformative. Friends, these developments speak of a grand vision of our Honorable Prime Minister, Shri Narendra Modi, especially his trust in the public sector and the people's participation for transforming lives across the nation. Government and Reserve Bank of India, together with commercial banks, have undertaking several initiatives to deepen financial literacy in the country. However, a holistic participation of all stakeholders, including the civil society, is crucial for making inclusion an enduring process. The achievements of last couple of years give me confidence that we are close to achieving our dream of financial inclusive Indian society. We must, and I am confident that we will prevail even if odds are set against us. I wish this summit all the very success. Thank you so much.
And now I would like to invite Shri Anthony DeSa, Chief Secretary, Government of Madhya Pradesh, for the guest of honor address.
The objective of all government, all administration, is the social inclusion of citizens. And what goes towards social inclusion? Good education, good health, a sense of confidence, a sense of dignity, and economic inclusion. And so economic inclusion too is a goal of government, because growth, prosperity for its citizens, and dignity for its citizens is what governments exist for. Financial inclusion is not an objective, but financial inclusion is an extremely essential tool to achieve the objectives of social inclusion and economic inclusion. In today's world, without financial inclusion, there can be absolutely no economic inclusion and therefore no social inclusion. We need to work as partners, the government, the financial sector, the administration, all together, so that we can use this very powerful instrument, which is in fact the only instrument available to us, the instrument of financial inclusion, to achieve our goals of social inclusion and economic inclusion. Thank you. Jai Hind.
Now next, I would like to invite Shri S.S. Mundra, Deputy Governor, Reserve Bank of India, for the guest of honor address.
Financial inclusion is a topic which is already discussed and debated to a very large extent. And from that perspective, I think the title which is chosen, that is the building financial capabilities. And we are not merely talking about the financial inclusion. I would like to talk on the subject of financial inclusion, financial literacy, financial capabilities in two dimensions. And those are the two basic dimensions, dimension of supply and dimension of demand. Now, as we have heard, we have been hearing, enough has been done on the supply side of the financial inclusion. Right from year 2005, RBI started a structured program of financial inclusion. That was the time that for the first time banks were allowed to engage banking correspondents for supplementing the services which banks were providing through bricks and mortar branches. Now why? Because before that probably it would not have been possible also, because technology was a very necessary element. So with the progress in telecom, it was possible to introduce the institution of banking correspondent, and journey started. Then we put the two phases of financial inclusion plan, 2010 to 2013, 2013 to 2016. In a gradual manner, all the 6 lakh villages in the country were sought to be covered under banking facility, either by way of a branch or through banking correspondent. So first phase was for above 2000, second phase was for below 2000, and by 2016, those things have been done. And very obviously, this entire efforts got a further boost or impetus when the Prime Minister's Jan Dhan Yojana was announced. Because within a short span of slightly over a year, every household in the country got a bank account. So the point is that on the supply side, enough work has been done. One final word of caution before I leave the lecture. The financial inclusion is certainly, is a national priority, and is not for any charitable reason for the institution. It is for the right commercial reason they should do it. But for a nation on a larger scale, as is famously said, that poverty anywhere is a threat to prosperity everywhere. So I think that is a very important national mission which need to be addressed. But in doing so, I would only like to sound two caution. Number one, from one extreme of not having any institution to the other extreme of having so many overzealous institutions, it should not happen that you create over-indebtedness in the target segment. So over-indebtedness is to be avoided, and for that there has to be proper checks and balances. So that is caution 1, and caution 2 is around mis-selling. I conclude here. Thank you very much.
Nice to hear Shri S.S. Mundra, Deputy Governor, Reserve Bank of India. Thank you so much, sir. Thank you. And now next, I would like to invite Dr. Chhatrapati Shivaji, Chairman and Managing Director, SIDBI, for the guest of honor address. Thank you.
The financial inclusion is one of the central point of the discussion even in the IMF and many other international bodies across the globe. In our country, of course, it is all the more important. I would like to dwell upon little bit on that account before taking into the real nut and bolt level of the actions which the country is now undertaking. In the Indian context, why it is so important? When our core objective and fundamental requirement to have the growth with equity and inclusive growth, despite a series of initiatives, game-changing, course-changing type of the initiative undertaken by the various institutions, the Gini coefficient which is basically the measure and indicators of how the disparity which is either decreasing or increasing. But the result is that it is increasing. Large number of the people at the bottom of the pyramid, they all are feeling it is very good that India is shining. But I am not getting the sunshine. Now I am making it little elaborate to make you understand that this type of the importance and the responsibility which we all of us are having on our shoulders. It is not enough. If we can increase our book size and the balance sheet of the company or the institution where we are working, is not enough. The aggregate growth or aggregate quantum of the value additions alone is not enough. The quality and the ingredient inbuilt in those numbers and aggregate numbers are equally important. Wireless solutions, technology solutions, have the fastest penetration and easiest, simplest and efficient way of implementing the whole thing. No human interface. That type of the faceless business model we can be able to bring about, and the days are not far off that you will start seeing that even the branchless operations, banking is must, but banks are not must. Thank you very much.
We've made rapid strides in financial inclusion in the last few years, but there's a lot of work still to be done. And especially in the area of pensions, which I'll be focusing on, there's a great deal that is still to be done. I'll ask you one question. How many senior citizens are there in this country? Do you all have any idea? You'll be surprised. It's 100 million. We have 100 million people over the age of 60 in this country, and the people in the age group of 60 plus is the fastest growing segment of the population in the country. And at the rate at which we are growing now, this 100 million is going to become 180 million in just 13 or 14 years' time. By 2030, this is going to be 180 million and 300 million senior citizens by the age of by 2050. So, this is a rapidly growing segment of the population, and the problems with which this segment of the population faces could well nigh become very difficult to handle if timely action is not taken to see that they get some income support in their old age as early as possible. I would urge upon all the bankers, wherever I go, I talk to them, it's the crying need of the hour to popularize pensions, to get as many people covered under pension plans as possible, so that they can stave off a possible difficult time in the future when they become old and helpless and are unable to work. So with these words, I'll end here.
Next, we have panel discussion on cash-based to cashless economy road ahead.
So I'll start with Mr. Amalorpavanathan. Sir, quick question and a big one at that. How do you see the direct benefit transfer, as we just spoke about? How do you see that as an important game changer when it moves to moving from cash-based to cashless?
Rural areas, cash transaction is not a big issue today, according to me. We are too much ahead of this. First is that we are talking about DBT. Again, DBT, if you look at it, many of the DBT schemes are interwoven among the public sector banks. We need to understand the aggressiveness of the public sector banks vis-a-vis the private sector bank, even in rural areas. Take, for example, in MP alone, there are private sector banks more aggressive in finding out the so-called cash-based, transaction-based lending and deep into the rural areas, because they understand, they deploy people who can understand what it is at the rural areas. Whereas the public sector has the limitations of employing the low-wage laborers who is required to go to the doorstep, understand the customer in the rural areas and then do the transaction.
purely the, rural India, just one question, the impact of digitization.
I think if you look at it from a real practical aspect, so there is a lot of innovation that is happening but I think what we all miss out, and I've said this earlier as well, is the fact that everybody is looking at it from the vendor's perspective. I will cut down cost in using digital transmission. I will, provide services at a lower cost. But at the end of the day, I think there also has to be some reckoning of the fact that especially in rural India, and it's not just rural India, it's also peri-urban India and, tier 2, tier 3 cities as well, where you do not have the, the prevalence of ATMs for that matter at such distances. The fact that even in peri-urban India, because microfinance actually lends more in urban India than in rural India, right? And we have been trying to work with, especially the larger institutions, trying to work with digital vendors to bring down cost of services. We're not able to do it because the first thing that hits you is the price point. Today, we've had one really large MFI which worked with M-Pesa for about a couple of years and finally had to draw out because of the price factor. There are others working with mobile wallets who've done pilots and are now trying to scale it up. Again, the hurdle is the price factor. So although you're trying to pull cash out of the economy and trying to, make it less risky, you still are not able to get there for various reasons. And really infrastructure, failure of service, etc., I think are much more luxurious things that one would debate and discuss about. I'm talking about something far more basic.
I hand over to Ravi to actually explain a hands-on experience. The private sector, as Mr. Amal said, that private sector needs to get more involved. You've actually done something.
There are certain perceptions the moment we hear the word financial inclusion being talked about, we immediately think of rural, right? Second, we end up our thoughts at opening of the account. We heard that. It's not about the money in the account. It's about how that money gets used. Is there a way that we can help move that cash transaction, whether it is happening through the DBTs or the money which has come in through the wallets? The person needs to use it somewhere. Is that digital or is that cash? Primarily that's cash. And we believe, while most of the payment players have focused on digitizing the digital payment already, right? All of us who are sitting here, including all my co-panelists here, we all would be using some other wallet. We already have a debit card or a credit card, which we were so far comfortably using before the wallets came in. And we have now probably are using wallet, but we are already financially included. We are already digitally included. So most of the payment players have focused on this space. Where we have tried to do is, the term which people like Abizer have helped coin is phygital, a combination of physical infrastructure. So you talked about the 4 I's, one of the I's that you talked about was infrastructure. We need to create that physical infrastructure if we want the financially excluded population to start using digital payments, to move away from cash.
So just the focus that I really wanted to have is, one is that UPI, I think, is now going to become this one big interchange for everybody, and everybody else is an outlet. How do you see that playing out, and what more do you think the banking sector can do to actually make the system, the vision more successful?
For the simple reason that, everybody's talking about it. Sure. Right from the deputy governors to the chief secretaries to everybody's talking about UPI. Friends, let me first put something in perspective. Yes, we do agree. It was built as a game changer. It is a super highway laid out. Let me put it in that simple terms. It's a super highway laid out. It talks about confidentiality. It talks of convenience. It talks of converting, really going digital. It talks of openness. It talks of APIs being available and people can plug in. But are superhighways always smooth? When we're talking of this superhighway available, yes, it is something available to the players. But who are the end users? Today, UPI is working only on smartphones. How are we going to take it forward? How are we going to go rural? How are we going to go to those masses who are not having smartphones? The majority population has feature phone. How will we handle it? These are the challenges I look for the industry going forward. But this is where the innovation has to come in.
We talk about the fact that there is cost which is prohibiting people from doing, cashless transactions. And this, it's a good thing to say that the disruptive models will come in. The big part of this is also how the institutions which actually do this cashless are able to capture the transactions. Because one thing about cashless is that every transaction is there for you to see. How does one capitalize on that, especially from a credit perspective?
If you look at it, these kind of financing is nothing but it's exactly like working capital finance or trade finance that we have for larger institutions. Because again, the data is available, what is available is who's going to get paid, there is predictability around those flows. And we have seen this again and again with technology that the same things which are used for, SME or corporate customers at one point of time start trickling down to the other segments of customers once it becomes available. But yes, it would need product innovation also. You can't take the existing trade finance product and put it over there. But the business principles are exactly the same. You have all that data available, just exactly like you have with an e-bill of lading. So for example, taking that vegetable vendor example, the wholesaler that she's going to buy it from is also known. So if you think about the entire value chain, then a lot more things start becoming possible.
That's all for today from the Economic Times Financial Inclusion Summit 2016. Thanks for watching.